Good weekend, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Friday, October 20th, 2023. It's your weekend edition, so we'll look at weekly charts. But before we go anywhere, you have to understand the kind of markets that you're in. I know that you want to trade the earnings. I know you want to trade what interest rates are doing and so on. But that's not the driving force today in a lot of the markets. Fear is the driving force. Geopolitical tension, uncertainty as to, does the U.S. get dragged into a war we don't want to be in? How bad are things going to get in the Middle East? Are we going to see more riots in the street even here? I mean, think of the protests that you've already seen. It's not a good thing. So I don't know. I don't know where this is all going to carry people one way or the other. I know that of the companies that have been coming out with earnings, about 25% have been a big miss, but most of the companies have been a beat. But the market is starting to think that high interest rates are now weighing on companies. And if you're reading the beige book from the Fed, you're seeing companies are slowly coming to the realization they can't keep pressing on the prices. Don't quite know what to do with that. They got to absorb more, and can they? We're seeing more bankruptcies. We're seeing at these type of interest rates, how many car loans are going south? Bad. Mortgage market has shut down the housing industry. 8% mortgage. Most people can't afford to keep their house or do whatever they're going to do. This is what you're dealing with right now. And it is. It's very rough to deal with it. So I've just got to tell you, fear is set into the market, and we have to be careful about what that fear might or might not do, and you have to trade it accordingly. Now, normally I would think in the month of October, like I did in my special report, that when I did it October 4th, I didn't know the Israeli situation was even happening, all right? So it happened at that point forward, and bing, the market has done something. Well, you could take out those seasonal lows, but that doesn't mean that coming back, you take out the low, you can still come back a bit. Normally, that's the time frame. If you go back to those prices, the market tries to hold on. The markets I wouldn't think would hold on with it would be the Russell. I keep watching on television as pro after pro keeps trying to buy the Russell, and there's a big graveyard of these people. And the reason is that interest rates do the Russell in. And the people doing it are really saying to you, I think interest rates have gone high enough and these companies will come alive because they've been so much under pressure. Because of that, they're the ones that'll snap back the biggest. They may be right, but timing is everything, and their timing is a miss. When you and I look at Amazon right now, Amazon not screaming buy in any manner. It's in a downtrend. I wanted to cover it because we have the Black Friday event, Christmas coming up soon. So I'm looking at the market now, getting myself ready. And is the market in any manner here saying be a buyer? There's nothing on this chart that I know that is saying it. The swing line pattern, which are these lines that connect, lower highs, lower lows. If you go to technicians, they will define that as a downtrend. The market is now sitting here under the 18-day average of close. This is the 100 and the 200. So the support that the market's trying to find is against the 100. It's not the day. If I said day, I'm sorry. The 100-week moving average of closes. If you think about it, it's a 2-year moving average. And the support's as low as 123.56 for good support in there. So I started looking at this chart and said, you know, when I was looking at it, eventually either Israel invades, doesn't invade, it'll go from this first phase of geopolitical problems to the next phase, which each phase gets better after that. The market starts not paying as much attention to the initial fear, is the U.S. getting involved or not. Once the invasion begins, if it begins, I don't know if there'll be one, to be honest with you. If it begins, they released 2 hostages today. Maybe they can find a way out of this mess. Who knows? But if it begins, well, a begin goes to an end. And when it's over, whatever that means, it's over. The market will be on to something else. Markets grab onto things and let go of them like that. Remember that. So this is where the support is. That's not a screaming buy. It's an area where most technicians would say, I don't want to be short anymore. That's how I interpret it, because you're also oversold. Momentum down, trend down, oversold. Could the market get spooked because of all that's going on in the Mideast? Can you imagine what happens to American companies, the fear that would hit the stock indices and all? Should a U.S. ship be attacked, get sunk while it's out there? Are we drawn into something we don't want to be? I'm giving you an example of a ship. It could be a missile. It could be, who knows what could happen. You could get drawn in. You're sitting there with two carrier groups. Anything can happen. Anything. Got to be careful. Microsoft, just sitting here. This is an AI giant. It's just sitting here, but it's in a basic downtrend. You have lower highs, you have lower lows. It came back up. It's fighting to hold at the 18-week average, but it's under it. So until you take out and get back over on a closing basis, that 18-week, it's easier to go back into the 312 than it is to go up. It's that simple. KRE, the banks are in trouble, the little boys. High interest rates, we'll see. The big boys withstood it. Can the little guys withstand these high rates? That's going to be the big question. And how is their loan portfolio? The big boys don't have a lot of exposure in commercial real estate. That is not true of these. What do is this has all got to be repriced at these crazy rates that are in place right now. So this is still weighing on the market. You're in a trend that is down. You're oversold, but you've been here. You've been going sideways now for the better part since August. That's a long time. MCHI, so today the People's Bank of China puts $1 billion into the system and the market doesn't even lift itself. That's pretty bad. They didn't want to cut interest rates. Their monetary policy was today they did nothing. And why? Because the private sector of real estate, in part, is come unglued. And they're doing nothing to rescue it. So there's going to be defaults, restructuring. When they go into default, do you see other world companies wanting to come in and take the properties that Country Garden, Evergrande have? I don't think so. I think it goes into you've defaulted, now what? And where's the punishment? And what do you do with those empty properties that are not finished? You're going in there, you're going to have the same problem that they're having. If they can't get it done, how are you? And the Chinese people are not buying real estate now because they're looking how the system's structured. The flaw in their system has been and continues to be, in large part, you go in, you want to buy something, you pay for it now. You get a mortgage, the bank pays for it. You may not get that property for a year and a half. You're betting that the companies won't fail. Well, in the past, they didn't. Now they are. All of a sudden, you go, I'm not giving them my money. And the amount of real estate being sold is crashing. It's one thing if you're going to transfer title of something that's already up, done, the building's up and running. Very different that you want to buy something new that's on paper. Or you want an apartment where it's pretty much empty, the building's there and they haven't finished all the goodies. People aren't stupid. Around the world, they're not stupid. They're not buying. Government's got to figure a way out for that. XLI, still very much in a downtrend. The industrial sector, I don't know. I keep looking. I see the Philly Fed. I see the other, Kansas City and all them. They're not strong. These are weak markets. New York Empire, we had a good number the last time. One number doesn't prove anything. But you're down at an area here that first you're oversold. Second, you're at the Bollinger Band. You're at the 100-week average. Would I be telling clients, hey, plow in and go short? I don't think so. I'm not a buyer, that's for sure. I wouldn't be telling my clients, hey, go out and buy it. But to go new shorts, I don't think so. Energy, it's very difficult to want to be short in any manner, anything in energy, because it's the one thing that comes out of the Mideast, a big product, the one big product, and they really impact the whole world. It's hard to want to be short that because there's calls for oil embargo. If anything goes wrong in some manner, you don't know the punishment that they'd want to hold out. I don't know. The Biden administration today made another change, and I want to go on record again. They don't know what they're doing in energy. I'm so sorry that they've got incompetent people in the White House. Now they want to put and tell the Saudis, they call them up and they go, we're going to be buying our SPR again. We're going to start at $79.50. Didn't they just say this from $72 down to and below it? And when the market did it, they didn't buy one barrel of oil. Not one. Now they're telling the Saudis, let's do that. You have a deaf ear? Because that's where it should be. They've run down our stockpiles. They're trying to tell the Saudis, go ahead, increase production. That's really what the message is. Increase production because we'll have your back at $80. Would you trust America? I wouldn't. We don't have an energy policy. We don't have an energy czar. We don't have any of that. Higher lows, higher highs, you've got yourself fully embedded right through here. That's still bullish. Well, that's the dollar. If you didn't even look at the chart, that's bullish. Until you lose that, I'm still in the bull camp. Gold. You came out of an oversold market. You're void of a trend. If you knew nothing else, and I covered the chart name, and you see a market go down to the Bollinger Band, the green, the 100-week average, I would be telling you, and I'm a machine here doing that. That's where I think the pros are covering shorts. It went one more week down to the 200-week, and what did it do? I'm going to cover the name. You don't know what it is. It turned around. Well, it happened to be gold, but it wouldn't matter if it spiked like that or not. The smart money comes out and peels positions off. This is that one event where you get scared, oh, there's going to be a war. 99% of the time, you're buying gold off that threat and it doesn't go. Remember everybody buying gold off the inflation threat? It didn't go. You had one move to 2024 and then the market fell hundreds of dollars. Well, this is the one event where gold is going because you've got 300 soldiers ready to move in. It's not the same as are they going to go? We think they're going to go, but have they gone? No. I said this morning, I didn't think they'd go at this point when I'm recording. Why? Sabbath. There's a lot of very religious soldiers. I realize the super Orthodox won't let their people fight in the war, but there's a lot of religious. There's different degrees in Judaism of the religious. There's people that don't even do anything. There's the ultra-religious, and there's groups there, the Reformed, the traditional. They do pay attention to the Sabbath. They don't want to fight on it. They will go to war on it, but why not wait that 24 hours? That could be what you're into. In GDX, you've got the market with a higher high, lower low, but is it the miners that are going to be going on this? If you're buying the miners because of that, I think you got a bad move. The gold is the play until Israel walks back out or Israel does something where they're not invading, all right? Then the gold comes down and you're caught holding the bag with the miners. I don't think the miners are the play. It's the asset. It's just that gold. That's it. Tesla, you can only cut prices so long, and then you're cutting into your own profitability, and then you're saying, the price cuts aren't driving traffic. And that's because people are questioning. I use the word questioning in America, not a question in China, the same question. The question in America is the newness got a lot of people wanting to own an electric car. God, I have so many friends that have them. But there's a problem. They won't take them from here and try to drive to Florida from Chicago. And I don't have one friend that has tried that. They're phenomenal for here if you want to go to Indiana, Michigan for a day maximum. But most of my friends are scared to take their cars on that trip, believe it or not. They have them for the city. Well, how many of those cars are going to be bought for that? All right. You get to the point where you got to worry, is that newness factor going off? Because we really don't have these charging stations in a convenient manner to drive on American highways and drive really on a 400-mile trip somewhere. You'll say, oh, Ira. I go, well, guys, that's an 8-hour drive. 7 hours, depends how fast you're going. All right. But people do those type of drives in a day. I don't know. I don't have a friend that will do one. And I have friends that own a lot of these cars. Just giving you a warning. So what happens? They can't sell. Now you're hearing that GM is cutting back its parts, what they're going to do. Tesla doesn't want to build the factory there. We have to catch up. Will it happen? Of course it will happen. But we need the infrastructure to catch up with everything else. In addition, electric cars are a lot more money. All right, so you're paying a premium for that cool thing. But I can go out and buy a hybrid. I don't understand why hybrids aren't more popular. They've got a gas engine that you can count on, and you've got the benefit of the other. For America, that's how you go. China, no. China puts the government comes in, they throw the money at everything. You can swap batteries, you got charging stations, and all of a sudden the sales are 60%, 70% of new car sales. Our government doesn't do that. They're relying on, if you think about it, Tesla and others that are beginning to get into that business, but it's very expensive. The infrastructure's not there, so it hurts. Uber's been bearish, but I'd certainly, with an oversold market and into the lower band, nah. If anything, I have confidence that Uber, they keep expanding the different products and people are going back to the cities. I don't mind the company at all. Here's what Uber's problem is, and it's a big problem. The more you think about it, robotic cars are coming. They're already working in San Francisco, a few other cities. They're working in New York now. You're going to get them in a few areas here where if they start to catch on, do you need that Uber driver? Because it's all short hauls that Uber's on. Well, that's exactly what those robotics are. Got to be careful. I'm not saying Uber can't go in that business, by the way. It's the point. Lower highs, lower lows. I don't know. I would think that the restaurant chain, probably between the 100-day average and the lower bands, finding some support. It's not a buy. You have an embedded reading. I'll like the market more when the red line closes over 21. Until then, we're all worried, is the consumer just yanking back? I pointed out this week that we were worried about the students, and Dryden certainly has places where the students eat. They own chains from expensive to inexpensive. But so what happens here? Well, if the student's only paying, I think it was $56 a month on average to pay off their loan, they have the money to still eat. I think the market might have gotten ahead of itself. In Google, I love AI. So how can't you? So yeah, it went maybe up here and it's got to consolidate the way Microsoft did. You put it together, you come up with game plans. But what's the game plan right now? At this particular moment in time, this exact moment, it's war. It's geopolitics. You got to be worried about it. Then we'll get back to the arguments, have interest rates gone high enough? I think you can build into your analysis the Fed is not going to move November 1st when we have the next meeting. Pretty much you were told that by the Fed chair this week when they're looking at the data and they want to sit back. They're still data dependent, they say. They're not forward looking as to what it is, and that's some arguments you're getting from different people that they got to start looking forward and just say, yeah, you could get little blurps, but that doesn't mean anything's going. The argument is, Milton Friedman had this argument. Interest rates take a certain amount of time to work through it, and who said it has to be 1 year? It could be a year and a half. It could be there's a number in there. And eventually it does come in. Well, the Fed job is being done by the Treasury right now. They're carrying the load. Because we have so much debt, they got to keep issuing higher and higher debt loads. They're getting higher and higher rates. The Fed's job is happening because those rates come into everything. So while the Fed sets one rate, if the market's exceeding their 5.25%, 5.5%, which were already there in the private sector, I'll call the government T-bills, okay, just for a better word. We know that corporations, so on, paying points over that. That's the dilemma that you've got. All right, I'm Ira Epstein. We talk about this and so much more in our Linn & Associate research. We cover the financials. We cover the interest rates, the S&Ps, ideas on the currency trade, the metal trade. So if you're trading your spiders, ETFs and that, go to our website, sign up for this research under free offerings. Move your cursor up here. You can do it that way. I'm talked out. You have a great weekend. I'm hoping over the weekend we get more clarity on whatever's going to happen or not going to happen with Israel. Take care.